May 9th. Today was a spike in channel bull trend. You can see we got a spike, a pullback, and then the channel up. And a lot of times what will happen on these spike and channel days is it turns into some sort of leg one, leg two. You can see we had leg one up here, and then a second leg that was the same height, which was the height of the channel. So that's the magnet that we were testing at the end of the day. I thought that, one important thing on the daily chart was that we were probably going to trade above the high of May 7th because it's a breakout point. And I thought there would probably be sellers above that high. I was kind of surprised at how strong today ended up being. Thought it was more likely we ended up finding sellers there and started to go sideways. But regardless, I do think that the traders, that's the high of this day, that breakout point. So I do think the traders who sell above this high on the daily chart and are willing to scale in higher are going to make money, since this is probably more of a bull leg in a trading range than a bull trend on the daily chart. Um, Also, Brad is making a review for, I noticed because I follow the Brooks Trading Course thing, but Brad is making a review on YouTube today. So I would recommend you watch that instead of this if you're, just watch one. Bar one, a bull bar, not really good to buy above. Not, probably buyers below, but I don't really think we're going. I don't really think we're going that much lower or higher. Again, trading range open. Big, essentially an outside down bar on bar two. It's a good bar for the Bears, but I don't really think that it's all that strong. Or it's really strong, but the context isn't all that great. I'm very tired today. I almost skipped making this review, so this probably isn't going to be a very high quality review, but I'm just trying to get it done. Bar three, a bear bar, but a big tail on the bottom. You can see we went 5.25 points, which means it was a 21 tick trap for the Bears. So the Bears who sold below two were one tick away from being able to make 5 points, and they were not able to make 5 points. So those traders were trapped. And then if you sold two, tried to make 5 points, and you saw three, you might start to think, uh-oh, I might be trapped. And you can see after we got a bull bar on four, those traders concluded they probably were trapped, and they just exited the market, and that causes the rally on five. Some traders who sell, they're willing to scale in higher. So maybe they sell below two, or maybe if you miss the sell below two, and you see three, you're hoping it's going to get a second leg down. And those traders will sell during four as we rally to the two close, and then try to get the second leg down. Five, a bull bar, like I said, probably caused by bears buying back shorts at the market. And six is follow through. We're probably always in long on the close of six. Okay to be long. Like I said, I thought the magnet was, or the profit target was here. Follow through for the bulls on seven, good for the bulls. And then kind of a disappointing bar on eight, a big doji bar, meaning that the buy the close rally is probably going to come to an end relatively soon. Big outside down, bar nine. Do you sell below nine? No, but I think you probably have to get out of longs. On the open, whenever there's a swing trade, about 60% of the time, the market tries to trap you out and make you think you did the wrong thing. I think for the traders who bought above six or seven, nine was that thing that tried to trap those traders out before we rallied up to the magnet. And you can see it did trap a lot of traders out. A lot of traders who bought, let's say six or seven, and they see eight, they know it's probably going to get a pullback, and then they see nine. They use the rally on 10 to sell out of their longs around that price, and that's what caused the second leg down on 10. 11 triggers the high one above 10. It's a really good bull bar, but doesn't quite close on its high. It's probably okay to buy above, but I think that you're buying pretty high, and it can be relatively dangerous. I was expecting it to probably get bad follow through like it did on 12, except instead of trading below 12 and getting some sort of parabolic wedge, 1, 2, 3, bulls ended up buying the close of 12, and that's why we rallied there instead. When you buy the close of 12, you'll probably just put a stop directly below 12, figuring if we trade below there, it's a parabolic wedge, and we're probably going to get a couple legs sideways to down. But instead, traders bought the close, and you're only risking 1 point, and if you're aiming for, I don't know, the magnet somewhere up here, you're risking a point trying to make 10. So it's a low probability trade, but when it works, your winners will obviously far offset your losers. It's a pretty tight channel and a huge bull breakout on 14. Doji bar on 15, I would probably just get out at this point at the market or below 15. Buy climax 14, so it could be a trap. So I think it's better to just be flat. 16, a high one. You probably can buy. We're always in long, and it's a bull bar, but really not all that great to be buying. I think that this range is probably coming to an end this trend is probably coming to an end pretty soon. The magnet's reached. Follow through on 17, but not as good as it could be. And then a bear bar 18, but a big tail on the bottom. So probably entering some sort of channel and trading range. 19, you can see sellers above 18, bad high one. Buy 20, a bear doji, or a doji bar. So, essentially a failed breakout of the 18 bar range. Bears are hoping we're going to get a sell off, but probably not going much higher or lower. The bull channel up was really tight, so the first reversal down was probably going to be minor, which is kind of the issue with selling bars like 27, 29. They're sell to close bars, but you're selling and you know that this reversal down is going to be minor, and the target is probably the 12 high. Since bears who sold above here might be scaling in, have a chance to get out break even. You can see we had two open body gaps at this point. So there's a chance this rally lasts all day, and it did, but it was a trading range for a big portion of the day. 21, essentially high one buy or high one or high two, however you're looking for the bulls, but it's a doji bar in consecutive dojis. I think this is a tight trading range. And 23, outside down. So again, just trading range behavior. Sorry, that was 22. 23, bear bar closing somewhat near its low, but I think that the 16 low is where the trading range started. We might test down there, but I don't think this is going all that far. And then you get a bull surprise bar 24. Do you buy 24? I don't think so. I think this whole thing is a tight trading range that started, the tight trading range probably started 18 to 19. And you're buying high in a tight trading range, and tight trading ranges are final flags as well. So I thought buying above 24 was rather risky. A lot of traders probably sell above 24 and put a stop and measure move up of 24, betting there's at least a 60% chance that this is going to fail. And the traders who do that, or any traders who bought it, see 25 as a doji bar, and that's not the follow through they wanted. And now they're long, high in a trading range, and so they exit the market, and that causes 26. Bear follow through 27, and then 28, a bear doji bar, right on the buyers, right on the moving average. Sell to close 27, sell to close 29. But again, minor reversal. How, do you think we're just going to collapse right here after we have this decently tight bull channel? Probably not. 30, a bear bar, but a big tail on the bottom, micro double bottom. 31, probably, buyers below 31 if we get there. But I think bears are going to exit above 31. That's probably what caused 32. Follow through for the bulls, 33. But, you're expecting a lower high from this. So a lot of traders look to sell maybe a 50% correction. You can see here, and then they just take the scalp when they get it. So they sell 50% correction. So it's not really great to buy above 33 because you're buying right at 50% correction where trader's going to be selling. So kind of tough to do that. 34 outside down, like I said, probably caused by traders selling the 50% pullback and expecting some sort of lower high to form from the sell-off. 20 or 30, 35 inside bull bar, but could be a second leg trap. I'd rather wait rather than buy. And then 36 is a low two, but you're selling right on the moving average, and the channel up from 31 to 36 is relatively tight. Probably buyers below 36 scaling in lower, which we start to get during 37. 38, bull surprise bar, tail on the top. It could be a third leg up. So, 31 through 33, 35, and then 30, 38. But the thing is, this is a really strong bar, and it might be resetting the market cycle. And then we get confirmation, follow through 39. So I think we have, in fact, reset the market cycle. A doji bar on 40, an inside bar 41. It's a high one for the bulls, but it's not really all that great. You're really high in a trading range. For me, I need a really strong breakout if I'm going to be looking to buy. And then another doji bar 42 and a big outside up bar 43. 43 is the bar that I wanted to see to buy. But, I thought we probably didn't go long or go sideways for quite long enough, and we did not close on its high. So if 43 closed on its high, I thought it was a much better buy than it ended up being. And then we got an II pattern, 44, 45, probably buyers not too far below. This is essentially, I looked at it as a higher high major trend reversal attempt. Here's your trend line break, a higher high. So we get a higher high major trend reversal attempt. But usually when you get a higher high, you need to get a lower high as well. So follow through 46, 47, but big tails on the bottom. And after such a strong rally up, and even the channel up from 38 to 43 was really tight, we're probably going to have to get a lower high. You get a big bull bar closing near its high, 48, and then a bear bar, 49. I think lower high, double top. And that's your lower high from the major trend reversal. So I thought a pretty solid sell below 49. You get follow through 50. And then bulls get a high one, breakout pullback 51 from 48. I think if you're short, you stay short. Some bulls might buy since it's near the moving average, but it's a doji bar. I think it's relatively risky. I think, we're probably going to go a bit higher, but the math is reasonable to be short because you have really good risk reward, even though your probability isn't all that great. Outside bar 51 and follow through 52. Bears want a strong breakout at some point here. So basically all this is trying to do is the bears trying to force a give up bar from the bulls. So either one of the sides is going to give up. And what the bears want to get is a give up bar that starts to sell off down to probably the 37 close, and then potentially all the way down here, but probably just trying to get to the 37 close. So they're looking for a bar where the bulls finally give up and get out of their longs and we get the sell off. The problem is the 48 low is a reasonable magnet because traders who, you want to be buying below buy climaxes and selling above sell climaxes in trading ranges, since those are reasonable trades. So you know that the 48 low is going to be a magnet and there's going to be buyers there. So you can see on 55, we initially found buyers there. And then we bounced and we found buyers again. And what ended up happening was the bears ended up losing confidence and they all just scalped out of their trade. And that caused a big bull bar on 60. So they were hoping that we were going to end up getting some sort of sell off down to the 37 close, I think at least. But it ended up just looking more like a leg in a trading range and traders lost confidence. Look at all these doji bars. You have 1, 2, 3, 4, four doji bars and just a lot of trading range price action here in general. And we've probably been always in long most of the day. So I think hard to look to, that's another good thing to say, I suppose. We never really clearly went always in short. We probably went always in long on 6. And, you could argue we went always in short here very briefly, but we never really that clearly went always in short for the remainder of the day, even though there were some bear moves. So 60, big bull bar closing near its high. I wouldn't buy above 60. You're buying really high in what's probably a trading range. I'd wait to see what 61 looks like. And 61 is a bear bar closing near its low. It's possibly a bull trap. And bulls will exit below. I think bears, it's a reasonable swing sell, but it never ends up triggering. And you can see traders did the same thing they did with bar 12. They bought the close and we got the rally. On 62, 63, an inside bar. You buying above 63. It's a high one. It's a reasonable thing to do. Citing, small pullback bull trend. Follow through 64. Okay to be long, but you're going to need good follow through pretty soon here. You can sense traders were trying to get some sort of buy the close finish. We were trying to get a sell off. I thought, ever since we got the major trend reversal attempt, 45 and then 49, I thought we were trying to create some sort of sell off again with 61. But it didn't end up happening. So I was thinking we might end up trying to get a buy the close finish, because oftentimes if you think you're going to try to do one thing and it doesn't end up happening, you try to do the opposite of that thing. So you get 65, though, disappointing doji bar, probably buy the close is coming to an end pretty soon, and you get a high 2 pullback to 73. But at that point, it's a tight trading range. That's a really risky buy to take. And we ended up getting some sort of buy the close finish, but it wasn't really tradable. For stop orders, 6 was, 6, 7. Maybe 11, but I thought it was just kind of a difficult trade. Maybe 16, but what's your goal? It's pretty high up. Again, kind of similar problems with 27 and 29. Yes, bear bars, consecutive bear bars closing near their lows, but what's your goal? I wouldn't take anything else until 39. And maybe you sell the II 45, but I think better to wait. I thought 49 was good. Maybe 60, but I would probably personally just wait for follow through. And you could probably buy 63, but it never gave you clear follow through, so it wasn't really ever all that great. So yeah, bull spiking channel on the daily chart. I do think we're going to pull back to this high at some point. This has been a surprisingly strong rally, but look at the past like 40 bars, right? Look back all the way back to here. This just looks like a trading range to me. So I think this is a leg in the trading range. Oops. This is going to be a leg in a trading range. So I don't think we're going to end up getting another, huge second leg up. I could be wrong, but I think that if we're going to end up rallying from this, we're probably going to go sideways for a little while longer first before we end up getting the rally. A lot of times, wedges or, sideways moves end up being half the number of bars. So you can see the move to basically here was like 105 bars. So maybe we go sideways 50, 60 days. You can see 30 bars. So maybe we go sideways another 20, 30 bars and then try to get some sort of breakup to the upside if we are going to the upside. Yeah, that's the day.